Good evening, everyone. Welcome to Closing Comments here on April 1st. Let's dive right in. Solid day in the cattle market today. Nice gains in the fats and feeders today. The June 25 live cattle contract saw support come in at that 202.50 to 203 area again. Prior day support area we discussed to start the week. Good supportive action early in the day. First hour and a half of the day saw price balancing out here before finally getting that break above 204 midday. Price closing near the highs, good sign. Nice solid close for the bulls here. Still need to get above the bull pivot for the longs to really kick in and keep pushing this thing higher, but momentum's on their side. We should see the bulls keep pushing higher throughout the rest of the week. All down the line, these fats look pretty solid. Some of these back months actually even gaining a little more ground than June today. So nice upside. Should see the bulls keep on carrying this thing higher. Same story over here in the feeders. Nice support early in the day, pushing us higher and closing near the highs. This May contract did get above the bull pivot for the week, so momentum should keep pushing the bulls higher here. Support at the 20 over the last 4 or 5 days. All signs looking up from here. That $3 mark is going to be the target for the bulls going forward. Be ready for them to start pushing up into that area. Looks like August is going to get there first, being at 292.45. Should just keep seeing the bulls push this thing higher. The uptrend looks good, remains intact, and should just keep on grinding. Corn market today saw some indecision. Not a whole lot of excitement here, just kind of some back and forth. Overnight session pushing this thing higher, while the day session basically just traded in about a 5-cent range here, 460 to 465. Lots of indecision, like I said, but one positive for the bears here is seeing resistance here at the 20-day average. The bears want to see price get back below 456, and they'll really kick in the selling pressure to carry us back down to 442. This has been a clear support line over the last 3-4 months here, so we'll have to wait and see how the market reacts if we get back down there. But if we do see continued downside below 442, could open the door down to this 415 to 425 area. Going to be sniffing out new lows. So as long as that downtrend momentum can keep going, bears look good here. However, we still could see a little upside and try and test this 470 mark again, but would expect the bears to keep the selling pressure on going forward this week. Next up, we got crude oil. Crude saw a little early upside today. Opening range broke out higher, but those highs were rejected and ended up closing price near the lows. This is a pretty good rejection up here in the high end of this prior range dating back to last fall, early winter. Could see some downside from here. Pretty neutral on this market, as price has just been pretty choppy and sideways anytime we've been in this range. So we could see a press back down towards the 70 to 69 mark, the middle of the range. So that's going to be what we're looking for going forward here. But in the meantime, just expect more sloppy, choppy action in the crude market. Another decent day of gains in the equity markets. The S&P saw more upside today. Nothing super convincing of a full-on uptrend from here, but we are liking how we're seeing these prior lows holding. We did get a probe of them, but price was pushed back above it. Like to see price carve out a range here in this 5840 to 5600 area on the S&P. Nasdaq was the weakest, and after this rejection from the 20-day average, did have a pretty nice swing below these prior lows. Meanwhile, the Dow has yet to make new lows. So 3 indexes kind of seeing a little bit of a different picture, but nonetheless choppy, volatile, sideways kind of market here at the moment. So expect that action to continue. If the bulls want to keep pushing this thing back up into these averages, that would be a good way to keep building a nice base here and set us up for a potential breakout uptrend throughout the end of quarter 2. But in the meantime, got jobs numbers throughout the rest of the week. Definitely an opportunity for volatility. Not a lot of conviction to either side here at the moment. Just be careful out there and remain defensive until we can clear some of these prior highs and find a smoother sailing above 58.40 here. But we got a lot of work to do, so no need to dive in too early. Let this market set up a good base and build a foundation for a good up move throughout the rest of the year. That's all we got for today. Thanks for tuning in. Have a good night.